Welcome, everybody. This is Steve Olson with the Peak Group. I'm happy to have you join us today to talk about our new Flex project coming up on Browning Street in North Richland Hills, Texas. These are higher end, custom flex spaces for businesses that are located in the area. And we're going to get started. My goal is to have this thing go a little less than 30 minutes, a quick webinar. I know we're catching many of you in rush hour or at dinner, and I'll do my best to admit people as the show goes on here. But these units are expected to be completed in July of 2026. So just ground rules. Go ahead and mute yourself, right? If you can hear me on this thing, and I will unmute at the end so that we can open it up for questions for those of you who want to ask them. So thank you very much for your understanding on that. And let's go ahead and get into the meat of it today. See if my slides are going. Hang on. Oh, there we go. Okay. So some of you know who we are. Some of you do not know who we are. Some of you are joining us through Zoom. Others are through Teams. We do these in a couple of different ways. But why invest with Peak? For those of you that don't know, this is a great fit for people who want exposure to different kinds of asset classes within the real estate space. But maybe you live out of the area. Maybe you don't want to be involved into the day-to-day operation. Ultimately, you're kind of a control freak, right? You want to still be able to decide how you want to finance the deal, when you want to sell it, what happens with rents. We're a great fit for investors like that because we really are soup to nuts. The construction and development and management, most of it is in-house and handled by us. We have built over 550 units. We've done over 500 million in investment sales to people just like you, and we currently manage 2,500 doors. And we've been doing this for a long time. So we hope you'll join us. We hope that you find an asset that works well for you as you explore getting into real estate, whether it be for the first time or whether you're a seasoned pro. I always like to talk about what else we're up to as well, because sometimes people join these for just kind of some high level interest, maybe down the future, but maybe they're interested in something now. And these are just a few of what we have in the pipe. Almost everything that we do is new construction and development. And those of you that are familiar with that, it's a really long runway. It takes a long time to do this stuff. So we have a lot of stuff in the pipeline operating out of our main offices in Dallas, Fort Worth. We also have an office and a GC arm and management arm in Birmingham. We are actually just getting into Savannah, Georgia, already done a little bit of business out there. We have a flex space contract or property under contract there. And we are inches from getting a couple of duplex and fourplex projects lined up, which we're excited about. So be on the lookout for that. And then, funny enough, as I record this, I'm sitting at an Airbnb in Utah. I used to live in Utah. I say used to because we sold our home a couple of weeks ago, and I'm uprooting the family to Nashville, Tennessee, and we'll be heading up Peak's efforts there. There are some great flex projects and residential projects that we have our eye on. And as soon as I'm on the ground there, we'll be able to move the ball forward a little bit faster. And then I'm also a partner in our projects in Indianapolis. That's kind of a JV thing, but I am one of the principals at the Peak Group as well as in the Indianapolis projects. And those tend to be duplexes, triplexes, and fourplexes. Sometimes pre-construction, sometimes we build them all the way to the finish. All these assets, all these markets have their pros, they have their cons, and we look forward to potentially visiting with you about those at some point in the future here. But that's a little bit about what we're up to. The new homes in Birmingham, Alabama. We sold those out last week. There are a few more being built. You see there the Weatherford, Texas flex space. That's a little lower cost than the flex space that we'll talk about today. There's a lot of that on the way, as well as the fourplexes and duplexes in the Fort Wayne and Indianapolis areas. Please reach out about that if you're more inclined to go residential, or if you like Weatherford or Birmingham. And we'll be adding more markets on this on the next webinar that we do. I just got to get settled out there in Tennessee first. So let's get into Browning, right? PeakFLX Browning, that's kind of a sub brand we use, is PeakFLX, is in North Richland Hills, Texas. It's a small project, 13 units. It's only 2 buildings. It is premium small bay flex space. Those units sell for $312 a piece. They expect to get $1,625 a month in rent, and that does account for the triple net component. Those of you not familiar with it, Triple net is when the tenant pays the taxes, insurance, and maintenance on the property. So it's a lot lighter of an operation for you, a lot fewer decisions to make. And they pencil out to be at about a 6.3 percent cap rate. And this is JP Morgan recently raised a fund. They're raising $10 billion to invest into shallow bay flex in cities like Dallas. They're acknowledging where the wind is blowing on this. And I'll get into some details on that in just a second. So I tried this video. I did a little dry run on the Zoom, and it did work on the Teams. We'll see if it works for the Zoom viewers. It's kind of jerry rigged here, but this is a great video that our team did about the area, the space. I don't know if you're going to be able to hear the very Texasy music, but we're going to try playing this thing right now. Oh, there we go. Now I can hear it on my end. I don't know if you can hear it on yours, but you can see our renderings. We'll let this thing play. Let's get into location. Okay, there you have it. Cool video, right? Kind of get really brings the project to life. I don't know if you could hear the music, but I hope you did. It was very Texasy, right? Made you want to be a rancher or something. So let's move on to our next slide. Hang on one second. Okay, there we go. So why flex space, right? Flex space, you may have noticed. Well, let me back up just a little bit. Being based out of Dallas, Fort Worth, we have wrestled for a while because we're primarily residential people, right? That's what we're used to. I've done it in a number of states, and so has the rest of the team at Peak. And when we talk about investing in Texas on a residential side, there's an old saying out there, two things can be true at once. You might be tired of me saying that. I say it all the time about this. And the two things that can be true at once are this. Number one, DFW is gigantic and it just continues to grow. So does the whole state of Texas. People just keep moving there. DFW is going to pass Chicago in the next few years as the third largest metro in the country. It's business friendly. People want to be there. But the second truth is this: when it comes to residential investing, taxes, insurance are a problem. They are high, right? Many investors were shell shocked when their property taxes went up tons and tons and tons just in one year, when they all of a sudden maybe couldn't even get insurance, or when it went up a massive amount. And it's made it extremely difficult to get deals to pencil in Texas, especially with the interest rate environment that we've been in. So we thought, well, there's people are moving here for a reason. What can we do about this? And the whole component of triple net flex space is really what came to mind. We started seeing some data about the need for this kind of product to serve a rapidly growing metro. And because it's triple net, it doesn't eliminate property tax and insurance risk, but it just evens it out over time. So you don't have that shell shock, and you can have a very a low drama, easy investment to own and operate. So when we talk about flex space, we're talking about industrial type buildings, but they look good because they do have a little bit of a storefront component to them, but it's flexible in how it's used, right? Big roll up door, we'll get into some of that, but we have huge demand from contractors and e-commerce and businesses who can't be in the gigantic office park or don't want to be in retail space anymore. And especially when we talk about infill spaces, there's just not a lot of this stuff left. Most of the industrial that's getting built are giant warehouses out on the fringes of the metro. That's really, really tough to do in the heart of the metro, in this mid cities area, right? There's a couple of cities that are between Dallas and Fort Worth, and that's kind of called the mid cities area. And if you've ever driven through it, you know it's just one giant city, one giant concrete jungle from side to side. So that's why we like it. And you know what? It's something that's easy for us to build and it's in huge demand and it allows us to continue to keep going in what we think is a great state and a great metro. So I mentioned mid cities. What about North Richland Hills, right? It's in that strategic central location, right? We have quick access via 820, 35, 26, right? It's near all of those. And so a business who maybe sometimes they have customers visit them, maybe they have to go out on calls to businesses or to residential areas, it's easy for them to do. Okay. So central positioning, it's by residential growth and a huge base of service businesses and contractors. I once heard somebody say, hey, flex space is going to work if you're within a few miles of a Home Depot. I think there's a lot of things that work if you're near Home Depot or Costco. They do a lot of research, and that's just a symbol that, hey, there's growth here. There's people that live here. They're spending money. And that's what we need for that durable occupancy and that long term rental demand. And we're going through lease up out in Weatherford right now on our flex project out there. And we have seen typically at least a 3-year lease on most of these. We got one of them that was less, but we're pretty sure he's going to renew. He just didn't like commitment, but the financials were so good, his business was so established that we thought, he's going to stay. We'll take him. So that's North Richland Hills. We love it, right? You saw in the video, it's close, within 20 minutes to Dallas Fort Worth International Airport. Not a lot of people can say that in Dallas Fort Worth. It's so massive, right? But let's talk about the aesthetics of this, right? It's a modern design. The city of North Richland Hills made us do kind of an upgraded facade to these. You'll notice they look different than some of our other buildings, which there's nothing bad about that. It's just they wanted an upgraded facade, something a little bit higher end, so that it may be a little bit more sensitive to customers who are coming to the flex space. That's not going to happen a lot, right? If you have customers in and out all day, you're more suited for a retail space. But occasionally you might see customers come to these. And so we have that good storefront appeal, that good curb appeal to attract those customers. We've got that big, tall roll up door, right? That makes it easy for your truck to get in and out for storage, whatever your business may be. And you're going to get good mutual tenants, right? You want the other tenants in the business park to be good as well. So we have a very light property association on the project that will maintain the landscaping and the entryway so that you're not just leaving that stuff to chance. I want to stress again, if you're looking for shallow bay flex in the Dallas Fort Worth metro, in a lot of metros for that matter, that's actually in the metro and not on the fringes, that stuff is old, right? Most of it doesn't have any customer appeal. So this is very unique in that sense, and that businesses will want to be there because of the modern, clean look to the space. I kind of went off on that, but you can see one great thing that we've added. In Weatherford, for example, this is something tenants have to pay for after the fact, but we're adding a mezzanine piece in the back of these flex units, no matter what, right? So that's great. It gives tenants more usable square footage, but it doesn't increase that footprint. We've got that tall ceiling, so why not use some of it in the back, but still leave room for the in and out of trucks or anything else that may need to be shipped in and out of the space. So they get that functionality, but they just maintain the lower occupancy cost, right? More, you like I said, you can use it for storage. You can put another office there, right? The tenants are happier with it because they're not bumping into each other all the time. They've got that extra cheap square footage. So these are the kinds of businesses that we're seeing, and this is penciling out into real life as we go through lease up in Weatherford. We've got a pool contractor, we've got a plumber. Shoot, I think we got an application from a gymnast. No, it's not a golf influencer, right? A number of different kinds of businesses that need these kinds of spaces. So contractors and trades, right? E-commerce people, they need somewhere with an office and a bathroom, but also a place to set up and fulfill and ship their orders out of. Like design firms love these types of spaces. People even use them for showrooms, right? Hey, come look at our flooring, come look at our cabinets, right? You can see you don't have people coming in and out of there all the time, but occasionally a customer needs to come see, hey, what are my cabinets going to look like? And I need a clean, good flex space to go do that. And then fitness and specialty is a big one, right? My kids play basketball, and wow, what a racket youth sports is. If you've got kids playing youth sports, you're participating in the racket just like I am. And softball clubs and gymnastics and dance and basketball, they fill these places up because they need a little bit of square footage to be able to run around, but also receive people at the space. So it's really designed for that good diverse demand, right? We can see the investment highlights of the project here. We're looking at a purchase price of 312 a unit. Your gross rents is 1625. There was a question about what the total positive cash flow was. It really does depend on your financing, right? And so, in yeah, those of you, you can just email me. We've got contact info at the end here, and we'll get you the pro forma that gives a full breakout of all the income and expenses associated with these triple net deals. And I'll give you some context around that in just a minute. But it's at a 6.3 cap, and we have a local lender, a local bank that is willing to do the long-term financing on these properties. Now, if you've never done a commercial loan with a local bank, there's a couple of things that are important to remember, right? We get used to doing residential deals where Fannie Mae and Freddie Mac say you only have to put 20% down for a home. On a duplex, triplex, or quad, you got to put 25% down. When we do a commercial loan, those are tied to what's called the debt service coverage ratio, which is very sensitive to interest rates, right? That's a formula that the lenders do. And really with rates where they are today, they're probably going to need about 30% down, right? And as you know, your rate and your down payment, that heavily influences what your cash on cash return, your internal rates of return are going to be. So it ends up being kind of a personal discussion we can have with you, the lender can, and we can adjust that pro forma to see where it lands for you. So another great thing that we do about this is we guarantee the 6.3% cap rate. Let me talk about how that works. I told you that we'll start getting completions in July, so next month on these units. So if you see one or two, and interestingly enough, you can buy one. We haven't had anyone buy just one of these yet. I'm sure it'll start to happen, but people typically two, 3 units, or even a whole building. But whatever works for you. So you'll pick your unit. We'll do a purchase agreement. We put that placeholder price of 312K on the unit. And then when the unit gets completed and we actually lease the property and all the taxes, all the insurance data is finalized, then we can actually calculate to that 6.3% cap rate. So this is a coupon, this is a guaranteed return essentially on that cap rate based on where we come in on the income and expenses. Your purchase price could possibly go down. It could possibly go up. It's not going to be a lot, right? You might get to 307 or 322 or something like that. But it's something that we've noticed that investors are very sensitive to in this market right now when they reserve units prior to completion, because sometimes there can be surprises when reality comes to bear that, oh, the taxes aren't what I thought they were going to be, right? The insurance isn't what I thought it was going to be. The great thing about that on this, though, is, well, if the taxes are higher, that's on the tenant. If the insurance is higher, it's on the tenant, right? And that was one of the questions that Mahesh asked in the chat. Does, just to be clear, triple net means the tenant's paying for maintenance, repairs, property tax, and insurance. And yes, that's correct. Now, We manage the property because sometimes people think, oh yeah, the tenants, they're just going to pay for that stuff. We don't leave that to chance. I had an investor express a concern to me the other day. Well, if it's triple net, why do I need a management company? Why can't I just manage it myself? And you know what? When you have a triple net property that is a single tenant, I think that's a fair question. That becomes much easier to do. But when it's in a multi-tenanted park like this, you need to have a sheriff in town, right? Because you don't know what the other tenants are and the other owners are going to do that could degrade the value of your property. And when it comes to like insurance or maintenance or taxes, we don't want to take the tenant's word for it that, oh yeah, I paid the taxes. Well, did you? Did you pay all of them? Right? Or the water heater broke. Oh, yeah, I fixed it. Well, what does that mean? Did you put duct tape on the water heater or did you legitimately fix it? So that runs through the management company who uses a licensed vendor to complete the repair and it bills back to the tenant, right? So you'll see it comes out off of your property account, but then the tenant reimburses. And so the net is that they took care of the maintenance at the end of the day. But you just don't want to take the chance that, you know, what does it mean to do the maintenance or to pay the taxes or what kind of insurance policy did they get, right? So that's why it has to be all handled through the same method there. So that's a question that we certainly get a lot. We people see that oh, there's a property owner association. We don't call it a homeowners association. These aren't homes, but the property owner association is extremely low cost. It'll be in the pro forma. I think it's $25 a month or something per unit. It's that's how low it is. I don't even remember. And that is just to enforce the CC&Rs, the codes, covenants, and restrictions, right? Just in case somebody is got a tenant that is doing things that they shouldn't be doing. We got to have some teeth to be able to go get them. And also the entrance to the project needs to be maintained. The limited landscaping that's there needs to be watered and maintained, and somebody has to do that. We can't just leave it up to chance. So that's another component that investors ask me about a lot. So let's we're almost wrapped up. I told you we'd keep it to about a half hour here. All right, so here's your next steps for investors that are interested. And while I'm going through these, you're certainly welcome to put questions in the chat, or I will unmute at the end for questions that you want to ask. You can scan the QR code. You can also email us at realestateadvisors@thepeak.group. And we're happy to talk to you about the project, the timing, what else is coming up, any other questions that you may have. So that being said, I told you we'd keep it to 30. We're a few minutes short of that. Maybe we'll do a question or two, or maybe we'll finish early. If you have any questions right now, go ahead and put them in the chat, or go ahead and unmute yourself and ask, and we can go over it. And if nobody does, then we'll wrap her up for the day. Sometimes I give it a little longer. Investors can get timid. Other times they just don't have anything to say. I would assume it's because I did such a great job. I mean, what else would it be? Well, it appears I did an excellent job. So thank you, everybody, for joining us today to talk about Browning. Scan the code. I'll leave the screen up, or send us an email. We will also send a replay of the webinar out for those of you who want to check it out. There are 13 units at Browning. Oh, and look at that. It happened. Hey, Matthew, thank you. He's asking who's in charge of the roofs, the AC, the HVAC. Great question. Great question. So let's deal with roofs first, Matthew. These are metal buildings, right? Technically, the HOA is going to be the one to be in charge of those roofs. But because they are metal buildings with metal roofs, we will all be dead before they need to be replaced. So, but if there was a problem, yeah, it would be the HOA that would step in to deal with the roof situation. And then when it comes to AC and HVAC, that is a mechanical component specific to your unit. So that maintenance is on the tenant for that to be replaced down the road. At some point, you'll have the CapEx. Well, when I say replace it, fixed, repaired, right? There's a difference between repairs and CapEx. You may have CapEx down the road, but if there's a problem with an HVAC unit, then that's something that the tenant will have to pay for. And we'll send our vendor out to handle it and zero it out on your statement. So I hope that helps. And another question coming in, Matthew. He's thinking now here. How long did similar project take to fill? That's a good question. We've got 15 units that we just completed in Weatherford, but they were completed in chunks. Yeah, I would say in that it's a small phase, it's 15 units. We're almost done leasing it. We generally get like 3 or 4 leases a month on this type of product. That's very, there's some time of year that can impact that one way or the other, Matthew. There's also, if the project is still a construction zone and maybe some of the landscape is not done yet, right? That makes it a little less desirable. Whereas what if it is done? What if a lot of the tenants are already in? Then you actually start to get some momentum. It becomes more and more desirable for the tenants. But ultimately, you're not going to close until the tenants are placed, until those leases are signed. But we're happy to share with you the macro data because you're probably looking out and saying, well, in the future, right? How long is it going to take me to fill these? Which is a reasonable question. Another question about commercial DSCR loans, are they 30-year fixed? They are typically fixed. Oftentimes I've seen 20, 25, 30, even longer terms, but rarely, right? Sometimes they're even less, but they will adjust, or there's a balloon in 10 years in most cases. So your interest is calculated based on a fix, but in 10 years, you got to sell or refi or pay it off or something. How many units in each phase? Are they similar square footage? Right? Yeah, Matthew, talking about Browning, there are only 2 total buildings, 13 total units. One building has 6, one has 7, right? Yes, they are similar, if not identical square footage, if I recall, and they typically have at least 2 parking spaces per unit, not including the garage space on the inside. But most people will just park out front and, the trucks will come in and out. So those are some good questions. I appreciate you all asking them. Just email us. We're going to wrap it up now. Email us at real estate advisors at the peak.group, and we can answer any questions you have about this project or any other projects on financing and availability. I once again appreciate you all and look forward to having you on the next webinar here at the Peak Group. Take care.